What has caused the correction in the Indian equity markets?
Now, there are no one single answer here, so I will give you a few pointers which have caused the correction in the Indian equity markets. And the key one clearly is the selling by foreign institutional investors. So foreign institutional investors have been selling not just in 2025, they have been selling consistently in the year 2024, 2023, 2022, and 2021, as the table on the screen shows. It was only in 2020 that was the only year in this decade where FIIs were actually net buyers in the secondary market. So we have to realize that FIIs are pulling money out, and there is a reason. And the reason is that FIIs are finding other markets much more compelling than Indian markets. So we think that this sort of selling will at some point have to abate because FIIs have sold a lot and they are significantly underrepresented in the broader world indices where India is also represented, like the emerging markets. So that's one reason. The second reason has been the weak earnings in Indian corporates, or weak earnings of Indian corporates. If you look at the chart or the table that we are showing, and this table is from MK, what you will notice is that in Q1, Q2, actually the earnings were negative in terms of the growth rate. Not the earnings were not negative, but the growth rate was negative, as in the earnings fell in Q1 versus Q1 of last year. Similarly, in Q2, the earnings fell again from Q2 of last year. It is only in Q3 that we have started seeing some growth. And that growth, as you can see, is around 4.6% for BSE 500 and around 3.1% for Nifty 50. Very weak growth by Indian standards. And that is one of the drivers which is causing the valuations to look high and for people to be less excited about the Indian equity markets. The third reason is the valuations that I was referring to earlier. While weak earnings are definitely part of the reason, the other part is that because there were so many participants last year in the Indian equity markets, the valuations ran much more higher. As you will see on the chart, Nifty 1 year forward price to earnings has now fallen to around the average, which is around, let's call it around 20. And so now when you look at Nifty 1 year forward price to earnings, it is below that average. And so the valuations have become more reasonable. If on the other hand, you look in 2024, it had gone way above average, even going beyond the one standard deviation above the average. If you then look at the Nifty mid-cap index, you will once again notice that the mid-cap index rose a lot, as reflected by the valuations in terms of the trailing 12-month price to earnings ratio. And now it is coming closer to its average. By the way, the average here is around 35 times. So in absolute terms, it is still quite expensive. Lastly, coming to Nifty small cap 250 trailing 12 months price to earnings, you can again see that it has come below average. And that average is still 30 times. So you can see that Nifty 50 is among the cheapest among the three types of indices that we have talked about. So apart from these three factors that we talked about, there are many additional factors that are causing this correction, including higher US Treasury yields, dollar strength. As we have seen, the dollar has risen a lot, and similarly, rupee has depreciated quite a bit. In addition, I talked about how the foreign institutional money is rotating from Indian equity market to the Chinese market. And also the US economic policy that we know will have impact not only on India, but many other parts of the world through the tariffs. So all these are driving what is happening in the Indian equity market.